We're going to be speaking about oil prices, which have already crashed 25% this year already. We're going to be talking about whether or not there's a further 20% drop yet to come. And I know, Jens, you were on the show a couple of weeks ago, providing some really great insights into the British pound. And before we jump into what's happening in oil prices, I'm sure a lot of our listeners, regular listeners at home, will be interested to see whether you're still buying pounds. I believe that was your call, I think, a couple of weeks ago, right?
Yeah. So let's put it that way. I'm still positive for pound sterling. That might surprise some of you after seeing. Shall I share my screen? Probably. So I've prepared the pound sterling set. So 1 second, then. You can also see here my my head shoulder formation. You probably remember when I talked about this, and I said we were trading around here, I think, when I was here last time, and I said, well, I'm positive for several reasons for pound sterling, and I also said that once this formation is not confirmed here with a break lower below this blue line here, this neckline, we could probably see some significant momentum on the upside. Now the thing is, we've broken here the neckline on the downside, and to be honest, with all the developments, and I think this makes also sense to already look at it right here, not only when talking about oil prices, but also when talking about the European economy, which also affects to some extent the UK economy, especially now around the Brexit topic, coronavirus and everything. So we've broken here below, and all in all, I think it's fair to say that pound sterling has some downside potential if things get worse. But on the other hand, I have to say I'm very skeptical about the US dollar too. So with US yields crashing, the yield differential between gilts and USTs is diminishing. And that said, I have to say that once this situation around Corona diminished or becomes the emotions around this topic, let's say, they get a little lower, and the voices are not that loud anymore, and people start to look at it from a fact perspective and not from an emotional based perspective, and pandemia is breaking out and we all have to die and all this. Once this happens, I think there's a good chance that pound sterling could play out this bullish scenario. I
think a lot of the markets are focused right now on obviously coronavirus, and I think oil markets especially, there's a lot of factors affecting that right now. So good insight there on the British pound. So we'll be checking in to see how that develops over the next few weeks. But like you said, it's all about the coronavirus right now, and oil prices have been really volatile. It's been a major market mover this year, hasn't it? It's been one of the biggest market movers this year in terms of.
Oh yeah, I think, and also we've fell to a bear market from a pure technical standpoint, right? With you had said already that we dropped 25%. I think 20% is the mark where we enter a bear market then, and this is something we reached here. And interestingly enough, shortly after this geopolitical tensions between the US and Iran at the beginning of January struck the market. I mean, yes, the situation has become a little better since then, but still, I'm not really sure whether this justifies such a huge drop here in oil lower. And
let's have a look at. Let's just bring up a chart of oil. And right now, look, we're trading around the $50 per barrel area on the WTI oil, which is a West Texas Intermediate blend, which is an international benchmark of oil prices. So we're trading around the $50 per barrel area. You just hit the nail on the head. Beginning of the year, we had all the stuff with the Trump and Iran situation. And we've seen oil prices decline from $65 to $50 in a very short period of time. A lot of technical analysis will also see the technical consolidation chart pattern as well. And now I think the question is for a lot of traders, are we going to be bouncing at this $50 area back to $65? Or is there the potential now for a breakdown in oil prices back down to the $42 area level? So Jens, any help?
Well, to be honest, I'm very skeptical for WTI right now. I think when Apple last week, I mean, it was a bank holiday last week on Monday. No one was really expecting anything that day. And then in the European after hours, Apple news hit the wire where they said we have to take back our revenue guidance we gave several weeks ago, where they said they expect the total revenue for the first quarter 2020 between 63 and 67 billion USD, I think. We have to take it back due to the developments around the coronavirus. I think this was a first sign that, that there's some trouble ahead, let's say. We already knew about corona and the potential impact that might have, but I think things also got worse. And in addition to that, it's not only Apple. I mean, Apple is certainly a global player with clear insights, but also, at the beginning last week, already on Monday morning, we had from the third biggest economy in the world, Japan, we had so bad economic data with the GDP crashing minus 6.3% on an annualized basis. That was, let me just see, I've written it down here. It was the sharpest contraction since the second quarter 2014 and the second biggest drop since the great financial crisis. So we're also headed for a recession here in Japan. Then was it yesterday, I think? Yeah, Monday, we had the IMF, which reported for the 2020 growth forecast for China that they have to take it down from 6% several months ago to 5.6 due to corona, which is also the lowest level of growth since the 1990s. We have now Italy here in Europe with corona spreading and also having potentially a negative impact, not just on the Italian GDP, but also with potential spreading over to other European countries. We talked about Germany last time, so we are also on a good way, let's say, into recession here. So also from this perspective, I think knowing that WTI oil is very dependent on the economic outlook and the economic growth let's face it, I mean, we are about to crash here with yields in the US dropping. I mean, okay, Chief Economic Advisor Kudlow, I think was it, who said last week on Friday that the yields are not a good picture or painting a picture in regards to the overall economic health of the US. I think this is probably only the interpretation of the White House right now, but
So I think you nailed it on the head there in terms of there's lots of fears in terms of economic growth right now, and of course oil prices are quite dependent on whether the world is growing, right? As the world grows, more manufacturing, more industry, more travel.
I think also from a political standpoint, things are getting very interesting right now because the OPEC already discussed cutting oil production several months ago, probably last time at the OPEC meeting in Vienna, if I'm not mistaken, in December. And now they really start to discuss this even more with Corona hitting and oil prices about to drop further. I think this is a pretty good way to put it. If OPEC plans on cutting, where they have a plan to cut, I mean, then they also expect WTI oil prices to tumble even further. And now they heavily depend on Russia because Russia says, well, yeah, we think about this. Let's see whether we can also cut our production here and stabilize oil prices. And so this is very interesting also when looking at the current developments around the US election, for example. I mean, I could expect to say, yeah, let's keep oil prices under pressure. That gives the Fed more room to ease. That gives equity markets in the US more room on the upside. This gives our potential candidate, I mean, okay, yeah, we know that Russia and Trump do not have anything to do with each other, but let's assume that's the case. So then we have also some a higher probability of Trump being reelected. So if we put it from this perspective, I think there's plenty of reasons to be skeptical that Russia will cut also.
I'm just going to bring it back just one thing. So the first thing, of course, a lower demand around the world, right? Coronavirus hitting economies, so we have lower demand from industry, from consumers. The second thing as well is about the internals of the actual supply side, which you're talking about OPEC. So OPEC is the organization of petroleum exporting countries, and they pretty much control oil markets, okay, mainly led by Saudi Arabia and the kind of Middle East territories. and Russia isn't actually included in OPEC. So there's been a lot of talk recently over the past, I think, couple of weeks, as you said, also in December. Obviously, declining oil prices, that's not very good, especially for Saudi Arabia, a struggling kingdom in terms of making most of their revenue from oil. So there's been a lot of talk about cutting production, okay? And if they cut production, that means there's less supply around to help boost prices higher, okay? So there's been a lot of talk about that, hasn't there, in terms of whether OPEC are going to do that. And you just said, I think in 6th of March, next Thursday.
Yeah, next week, Friday. Yeah, exactly.
Thursday, Friday, they're meeting in Vienna to decide what the next step is. Now, I think the interesting thing, and I'm just going to bring it back to the chart here on WTI, whilst we speak about OPEC before we look at other factors affecting oil prices right now. But it was all the way back here in 2018, right? The G20 meetings in Buenos Aires. OPEC and Russia agreed on production cuts to stop this massive fall in oil prices for much of 2018, and that led to a massive rally higher, okay? But actually, since then, they've cut production twice to try and get oil prices back up again. And the interesting thing is, even though they've cut it again, it's still quite depressed, the price, isn't it? Even though they're constraining supply, the price is still quite depressed. And I think that's actually quite a bearish sign, even if they're doing these measures, but the prices still really aren't that high.
If we look here also at the US, I mean, the US, thanks to fracking and this fracking industry, I think the US is also one of the biggest oil producers right now in the world, and so I mean they are really firing from anywhere to keep the supply quite high and the oil price low, let's say, probably also due to the fact that this is something supporting Trump in his current political situation. I mean, it means lots of jobs are created there. Whether it's sustainable or not, okay, that's the question. But they have plenty of demand for employees here. They have a low oil price, and low oil price usually means also a cheap cost when it comes to doing business, or let's say economic growth, whatever. So the demand here is higher than probably it would be once prices are high. And also this is something where the whole picture gets very, very complex, because I'm not sure, but let's at least say I could imagine at least till the election in November 2020 in the US, the oil price being staying depressed, driven by also all the supply given by the US fracking industry to keep oil prices low. So even though it might affect an ally from the US, Saudi Arabia, in a negative way, but I think at first it is of interest for Trump to be reelected, and probably this is also one of the reasons why the price can't really take on bullish momentum here. Even though, I mean, certainly we're talking about a quite long time frame, over 1 year now, but still, I think from a longer perspective, probably that makes sense to take this into account here too.
But I think it's quite complex, the fracking situation, because they actually need oil to do the fracking. So when oil prices do actually become cheaper, it's actually better for fracking, and it's almost like compounds the whole situation. So it's quite a complex one, and that's the thing with the oil market. There's a lot of different factors affecting it, especially in the US as well, but also unrest in the Middle East. Also, what is Russia going to do? Russia's already announced that they don't really want to keep on cutting production. Demand from China as well. So there's a lot of factors affecting oil prices sort of at these levels. And just a reminder for everyone listening at home, if you do have any questions for either me or Jens, then obviously just put it in the Q&A or chat box. We'll do our best to get to that. But I did have a question here pop up, and the question is more of a sort of technical related question.
Mm-hmm.
If oil prices do go lower, would you wait? How would you trade it? So would you wait for the break of support, or would you trade now in expectation of lower oil prices? So how would you tackle that, Jens, where we're sitting right now? Do you think it's the right time now, or we need to wait for more information?
Wow, this is not such an easy question.
That's why I asked it.
So, well, when looking at your chart, I mean, it's a weekly chart, right? So,
This is a weekly chart we were looking at, yeah.
so if we go lower to a daily time frame, then probably if you carefully see, you can also watch here. You can also see that here that the picture, the last high, which was marked several days ago, at what is it? It's 54.30, 50.
Around 54.
Yeah. So what we could probably do is say we short a break to new lows, but with a stop at 54.30, 54.50, which means we have a risk here of $4.50 around, something between 4 to 4.50. But when looking at the target, we're looking for on the downside around 42, but probably also 40, probably even a drop below that. But let's be more conservative and work with the target around, let's say 42 or so. We still have a quite attractive risk reward of nearly 2 to 1 for such a trade. So that's probably what I would do. I wouldn't anticipate a break lower, since we currently do not know in which direction next week Friday the OPEC meeting in Vienna goes, and if probably we get an announcement here in regards to Russia and what they plan to do. But let's see. If there's no such announcement, I think this is a clear bearish sign, especially in the current market environment with the global economic slowdown. And I could definitely imagine then the lows around 40, 49 here to break, 49.20 to break. And the market take on momentum from there, and placing a stop at 52.50, let's say, and then go for the region around 40, 42 on the downside. I think this is how I most likely trade it then, and that means I would wait for the confirmation on the downside.
Yeah, and I think that's the important thing, isn't it? When it's easy to start throwing words out like, do we expect this to happen? Should we get in early? And, it always looks great after the event,
and we all knew it. This is the beautiful thing. We knew that it is exactly how it would have happened.
Exactly. So when you're trading in real time, it's all more about forecasting, trying to understand, okay, what's the bigger picture? And as you've been saying, we've got lower demand right now across the world because of the coronavirus. Yeah. Even if that starts to abate and, it starts to not spread as much as it has been, there still might be a bit of time before things get back up to, growth levels that we were having, a few years back. So we not only do we have lower demands around the world, we've also got OPEC who are trying to push oil prices higher, but Russia have already said they're not really that interested. They've already constrained supply 3 times already since the G20 meetings in 2018, and prices are still, not that high compared to where they started. Yeah. So we've got that. So it's all leaning towards more of a bearish tone, but you never know with OPEC, right? The initial headline of them cutting supply initially will probably lead to some very short-term bounce in oil prices, right? Because now we're seeing that on the hedge funds, a lot of algorithms which search social media for key terms, we get the instant reaction. So this is what we're trying to find. We're trying to find those situations where the short term is lining up with the long term, right?
Yes, exactly. Unfortunately, right here when we talk and the longer I think about it, the more obvious it becomes that we are very, very bearish. And I think this is also from a sentiment perspective something which is very difficult, because if everything points into one direction, markets will always show you there's also another a side of the bet, and not only that, but then a sharper squeeze higher. Unfortunately, I haven't found the chart, but I know I've once seen one from a pure statistical standpoint, and there was one guy who said after WTI dropped to a bear market, which happened just some days, some weeks ago, then 12 months from there, the market had a higher probability of trading higher compared to the last price than it was that it traded lower. So also from this perspective, I think probably, we are probably a little too bearish, and it's too obvious that we're about to head lower, even though I have to say, I mean, in the long run, fundamentals, there's only one direction in which WTI in the current environment is potentially headed. And I think this is lower, even though with having this in mind, that there could also be a turnaround and a sharper bounce, it also shows that you have also to take this into account. That's why we have a stop. That's why we have to find an adequate position size, not going all in short here or something. But I think still the advantage is clearly on the downside. Yeah.
Yeah, and I think it totally makes sense. So wise words from Jens there about maybe just waiting for the OPEC announcement and see how that sits. Because again, you know, after such a big drop, oil becomes very cheap to airlines, to manufacturers who need it. So we can easily get a little bit of a buying momentum. So it's just about waiting for those things to align. We've already had a decent run there in oil prices to the downside, but it's definitely going to be an interesting market to keep an eye on WTI, because it's such at a key level. And even though we are bearish, follow price, right? Because if we do see a big rejection of this $50 area where we are now, I mean, we have to be prepared to switch and maybe even start looking to the long side and maybe even start looking for reasons to get to that. So it's always good to have a balance, even though everything's leaning towards the downside at this moment in time.
Yeah, exactly. I think, and here the line in the sand, when to really consider long engagements instead of the short side, it's also the level where you will place your stop. So if we do not break lower here and below 49, but instead turn around and make it back above this 52.50 level, I think then we have also plenty of room on the upside for the higher end of the range, which is around where 65, 67, something like that. And it's also true from this perspective that the risk reward is quite attractive then for the long side. This is also definitely something where flexibility comes into play. Certainly.
Okay. Yeah. So look, really, really good stuff. So key takeaways. Fundamental picture looking a little bit bearish right now, leaning more towards the bearish side, lower demand, but we have a red herring in there with OPEC meeting next week. What are they going to do and how are markets going to react? So it's going to be a key one to wait for next week's OPEC meetings on Thursday and Friday, see which way price breaks. We've got as you said, the low. If it gets taken out, we could well see some downside, but just be balanced and obviously look for a potential move to the upside as well. But again, it's all about just lining those things up. Okay, so really actually interesting takeaways from there from you, Jens. So really thank you for that and for being on the show today. From everyone at home, thank you for tuning in. We hope you found this show to be of value. All the best on your trading. This recording will be put up on YouTube, so if you do any feedback or comments for either of us, please do feel free to put it in there. But in the meantime, all the best for your trading, and we'll speak to you very soon. Bye for now.
Bye, guys.